All right. So to start this video off, the first thing before you start trading, although I use the 1 minute time frame mostly, you want to go onto the 1 hour, right? And you want to find your draws on liquidity because that's liquidity is what moves markets, right? So this is Fridays, at the end of Friday, and you can see that it took already this. So we're just gonna mark out this new low that it made, right? And then this will be our sell side liquidity, sell side, right? And then you can also mark these relatively equal lows if you want, but I already took it out with this wick. So this is basically a rejection block, but that's besides the point. Then you can mark these equal lows, sell side, and so on and so forth, going down or going up. Now you mark your buy side liquidity. Now we have equal highs right here, right? Then we have equal highs right here, relatively equal highs, actually, not actual equal highs. And then that's essentially it. I believe we do have these highs right here, relatively equal. And then we'll just say all-time highs, right? Now, after you mark out your 1 hour draws on liquidity, right? You then go to your 1 minute, right? And now looking at the 1 minute, I believe here it is. So for Friday, we had this huge ass gap to end Friday off. So go ahead and mark those gaps, huge gaps you want to mark from wick to wick, right? So we have this wick to that bottom wick right here. You don't have to be exactly precise as long as you have an understanding that there's a huge ass gap here that needs to be filled, because before price goes down, it needs to go and rebalance this imbalance. That's what you want to think of gaps. Gaps are where imbalances are created, or imbalances are where market hasn't retouched or revisited, right? Okay. Now we could just drag this whole ass gap all the way through. And so based on this, right, higher time frame for the whole week, in my opinion, we're bullish, right? Now we could go down, sweep these lows, sweep like all these lows, right, on this 1 hour time frame, right? But in the end, what I want price to do is sweep the lows and then start going back up, because price can't go higher unless it takes out liquidity bottom at the bottom, like sell side, to go higher. Same vice versa. Liquidity or market can't move down unless it takes liquidity on the upside or some type of imbalance and rebalances, consolidates, and then goes towards where it wants to go, right? So yeah. Okay. Yeah, basically. Now, we're gonna go back on a 1 hour or 1 minute time frame, right? So this is the end of the day. Now, since we're bullish for Asia session starting Sunday, we should get some type of push up, right? Because we have this imbalance too right here. We have this huge imbalance, right? And then we have this huge ass imbalance up here. Now, what I want price to do, is push up towards here in any session. It could be any session, but most likely you want it to do that in Asia session to immediately rebalance this area. Now it could go and tap into like the third quarter of this box. It doesn't have to go all the way halfway, obviously. Right? We'll just use this as a reference. So it has 3 different zones, right? The bottom quarter, second quarter, third quarter, or fourth quarter. Now it could go in between these 2 quarters and it'll go down, probably because it'll be balanced basically. It doesn't have to go all the way up, just like a fair value gap. If it respects it, it'll only go towards the middle and then it'll shoot back down. But what we want is for price to go towards this imbalance. Now, with that in mind, let's go ahead and play what happens, right? Okay, market opens. What does it do? It shoots down. Now, it shoots down, and you're thinking, well, it's gonna push lower and go down towards this sell side, right? Well, it can't really go down without the movement up first. And we've already been in a downtrend. We've took out so much liquidity on the sell side Friday and Thursday. Why would it go down lower, right? So let's see what happens, right? We can mark out our fib from this bottom candle to the wick, right? So this is to find your levels on the upside, right? Levels on the upside, boom. Body of the candle to the wick, because we don't have any wick. And then we have this wick down to this candle, right? Now let's continue to let it play out. Let's see what happens. We have this sell side down here on the 1 minute. These relative equal lows down here. So we can mark this as well on the 1 minute, right? Keep that in mind. This is on the 1 minute. Okay. Now let's play. Okay. Now what does it do? It goes towards it. It takes out New York PM. Okay. Like I said well, I haven't said it yet, but basically market likes taking out session lows and session highs. That happens everywhere, right? So Asia session, it sets the standard, right? It sets this high, it sets this low. Sometimes it doesn't always take it out, but that means it's making more liquidity on the upside, meaning there will be a bigger move later to take out, boom, that one, boom, that one, boom, that one. Take out all this liquidity on the upside from these session highs. But Asia usually sets the bar. London sometimes will take it out. If not, it'll be like consolidated in between Asia or whatever. But basically, New York PM and AM will take out the lows unless Asia or the session has already took out some type of huge liquidity. So like this one, for example, if we go on the higher time frame and we look at where it took that liquidity, it took out this huge ass wick, right? This huge ass wick. And then you can see that price instantly just wicks past it just to take out these wicks, because these wicks are considered sell side liquidity at that time. Now, it creates this huge ass imbalance, right? Go back to 1 minute. Let's go take a look at it. Right. What does price do? It trades to it. Let's go ahead and look closer at this side. We have a smaller rejection wick at this. Let's drag it across. What does price do? It rebalances that. You see that? Rebalances halfway. This makes this wick a order block, right? So price rejects off of it. And what does it do? It took sell side again. So it starts pushing up. What does it do? It takes Asia highs. Boom. Asia highs, right? Now that you have the understanding of where price wants to go, what price wants to do, how to find your daily narrative, how to find liquidity, how to find imbalances, we go ahead and look at what happened on Sunday, right? So we have this push down towards sell side. On the higher time frame, this is the 1 hour sell side. It takes it. It also takes this wick right here, right? Then it also trades down lower towards this 1 minute, but this is also an order block. This is also an order block right here. This whole thing. Now let's see. Let's play it. Let's see what happens. It respects. Instant rejection off the midway of the order block, right? Now here at 7 o'clock is what I've taught you, and not my students yet, because this is a private video. If we want upside, we'll just instantly buy it at 7 o'clock. Now, depending on your fib, you could draw your fib. You could be like, oh shit, okay, this is all manipulation. So let's go ahead and draw this out from wick to body, right? Wick to body. And this will also give us other levels, right? Now, we could also draw our OTE zone from wick to wick when it breaks structure, which would be, I believe, this one. Okay, let's see. So I got to get better at figuring out where the OTE is. It might just be this one, actually. Right. So you could theoretically get your entry at this wick, knowing that this order block instantly rejected and it couldn't reach lower to grab more sell side because it already grabbed so much, right? So you could get your entry down here and long from this wick, 50-point stop, right? You don't want to get in on this wick necessarily because you want to give market room to breathe. After it takes some type of liquidity, make sure market breathes for a little bit, right? We give it around 10-ish minutes, right? And then we get our entry, right? You want to be patient. No matter what, be patient, right? So here's our entry from always 0.618, right? Boom, entry, 50 tick or 50 point or tick stop, and you go for 200 points, right? Boom. All right, let's let this play out. I believe I got in around the pullback, right? No, right here. I got in at this. I believe this wick. This candle, this pullback. Right here, I believe. I got in early because I knew that we were gonna go up. Okay, that's besides the point. Now, let's click play. Let's see what happens. Now, you see this double wick right here. Boom, boom. This is your sign that market is rejecting heavily off the sell side, right? Now, if you got in at 7 o'clock and you longed, say from the bottom, right? You want to get as low as possible. And 50 ticks. Low as possible is obviously not going to happen all the time. And then if you get in at 7 o'clock, you always aim for the next liquidity zone, right? So this would be your liquidity, right? Boom. That's your winning trade. This is also your winning trade right here. 1 to 4 RR. This would also be 1 to 4 RR. Now, like I said, I got in down at this body close right here. Right here. Because I seen it reject off this basically basically you could get in depending on how your narrative is. You could get in anywhere between this zone. There's also two types of fibs you could draw. There's the one where, say price goes, I need a drawing tool. Say price goes, where's the drawing tool? Okay, say price is going up, and then it goes like that, and it goes back up. Oh, whoops. Boom, boom, right? Here's your first fib. From wick to wick. I didn't draw it perfectly, but basically wick to wick, right? Boom. And then it'll tap you back in right here. This is only when you're in IOFED, right? This is an IOFED entry, meaning it's a continuation entry. Like here, you could get in off this wick to this wick. Sometimes it doesn't always hit, obviously. But most of the time, I'll let it play out, but we'll have this. I'm pretty sure it taps this soon. It will tap it like later on. But basically that's the first one. Or it'll be off the it'll be the same type of thing, right? But it'll be for this type of movement, right? It'll be boom, 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 and then boom, right? This happens when this high is broken by this, and this low is also broken, right? Once you see this, you drag. This is your manipulation, right? Boom, boom, manipulation for your levels, and then this is your levels. I almost drew it perfectly, but basically that's it, right? And then you'll get your entry right here and ride the wave. All right, now that you know the two different types of fibs you could draw for your entries, we go over how this plays out. Right, so 7 o'clock you buy instantly because you know that price. Asia likes to take out intraday liquidity, so like 1 minute, 2 minute, 3 minute, 5 minutes, like just small liquidity. And this is on NQ, so you can make 1,000 from this, right? So let's continue. Let this play out. You don't ever go break even, right? If you're on the 7, if you're entering from 7, you only go break even at around like 50-ish points, or like when it's 1 to 3, right? You go break even, or you go 1 to 3 ratio, right? Make this 1-3 ratio, 1 to 4, and you, if it taps here, you could go halfway, right? Or for 1 point. Okay, let's continue. Pending, lick. Right here. Boom. Barely any drawdown, right? At this 75%, you could go break even, or you could go to your 25%, which would be 1 to 3 RR, right? Or you'll get like, so if you put this, you get like 250 if it goes back down here. All right, so it taps here, but I knew that it would go higher, right? So I dragged mine to my level, where my entry is. My level was around here. This high, these highs to get broken, right? Let's see how it plays out. Play. Asia opens, manipulate down. But we know we don't care about that. And we play. See what happens. Actually, it was this wick I got right here. Boom, that wick. Right? And that was a freaking like 1 to 6 RR or whatever. Okay, continue. And I got out of the trade here. Now I could have held if I wanted to, right? It's a free entry, no drawdown after this because I got in down here. Let's continue, continue, continue. And what does price do? It keeps on going up. Let's get rid of these levels because these are kind of in the way. What does price do? Where's the heading? Where's our box at? We have this zone that we need to fill this imbalance. Now, what does the price do? Eventually, right? Eventually, I think it takes a while. Here's midnight open. Any second now. Here's London open. Goes back down. I think it swept this liquidity and then it starts going back up. Yeah. Yeah. There we go. Right, right. Boom, 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 boom. Then let me pause. We have, what is it? Market open. 9:30. I want to stop it before 9:30. Okay. Right. Now, let's see what happens. It's webinar liquidity. Go back up. Okay, here's when it starts dwindling down. Then it sweeps this liquidity. Now it's in our box. And where are we at? We're on the bottom quarter of our imbalance. Bottom quarter. Okay. Oh, shit. Okay, okay, okay. So here's what it hits, right? Boom. Literally bottom quarter of our imbalance. All right. Now from here, you could speculate that it'll drop, right? Because as I said, New York loves going back and taking out session highs and lows. And you can also see that we're above true day open. Anytime you're above true day open, you want to try to take trades towards that true day open / midnight open, right? Now, we're also at 9:30 where market opens exactly for New York, and 9:30 loves manipulating. So when you're here, you could go ahead and grab this, pre-mark this out as manipulation with the fib. Mark this out. Boom. Right? Okay. Alright, so that's Asia session, right? That's London. If you got in down here, if your bias is right, you only got what? Like $80 to draw down compared to what you could get. Boom. Obviously, you don't know where market's gonna stop, where market's gonna go, like exactly. But you can make the inference that look at these equal highs. It got swept by 9:30 manipulation. Anytime there's a sweep after it manipulates, just know that you need to look at that zone, right? Same thing for here, right? We have this market open, manipulate down, takes liquidity. Just make note of that. Anytime it takes liquidity and it's in a manipulation time zone, like market open, there's also other examples, but I can't bring it to the top of my head. But yeah, make note of that, right? Now that we know that it's in our imbalance zone, right, we could try to look for shorts. Now, 930, heavy manipulated. We took buy side already. Boom, just took this buy side. So you can anticipate that this manipulation was just to take this buy side to go down. Now you wait for confirmation. Play, 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 play. Here, you draw your FIB, your OTE zone from wick to wick, right? Because this is a continuation. And look, boom, here's your entry. This wick is your indication that, yeah, we're going to go lower. This was manipulation. So you would go short here. Boom. 50 points. And you would aim for 1 to 4. And boom, that's instant. Or, since you're in New York, you could infer that we're going to take out boom, boom, and boom. Take out all of these. At True Day Open, you sometimes want to always take a partial here, just in case, because you never know what happens at midnight open. Now, we have this done, and this would be your trade, right? 1 to 10 or 1 to 11 RR. You would play this. Let's play it out. See what happens. At midnight open, you can see that it bounces off. See, that's why you take a partial. Or you could just believe in the trade and get full TP in about like 20 minutes. Boom. Right? Now if it runs lower, it runs lower. Fuck it, just let it run lower. You could also have a runner if you want. And here's what it does. It runs lower. Let's see if it runs even lower than that. I don't think it does. I think this is the low of day. Okay, yeah. Okay, this is low of day. You take a look at this zone right here, right? At this zone of 3.25 and 3.5, if you get your correct manipulation zone, your FIB will show low of day, rejection zones, or in between this. Usually market likes to just tap here and then reject off it, or it'll do something in between these two zones, right? Or you could just go off the levels and you could literally buy at this level if you want. Now that's with just making sure you have confirmation, right? You don't necessarily have to instantly trust these zones, but looking at the zones, this helps. We also have this one, but that one doesn't reach. Okay. Now, you could also took this trade right here from wick to the breakage structure. So this wick, I believe it taps us back in. Actually doesn't. It would be there, here, right here. This one. Boom. Now the reason being, right? We have this basically an order block. This wick should never get touched because we just took liquidity, right? We just took all this liquidity. We also have our level, so just trust in your level. Then you have this, right? So we have our second manipulation downwards right here. We also have this fake sweep right here, or real sweep. I forgot how to explain it, but this is the real sweep. And then we have our fake sweep down here. Fake sweep, right? Makes equal lows. So this is our manipulation. This is our OTE from wick to body, actually. This one would be body. And then your entry would be at this zone right here. And you could aim for 1 to 4 RR with 50-point stop. 100 points. Right? And you can get that in about 6 minutes. Now, you could also aim for true day open, but in this scenario, it doesn't hit, right? And you might be like, oh fuck, why did it not hit? It's literally 1 tick off. You want to know why? I'll show you why. You take this fib from this wick. Where'd it go? From this wick all the way to this wick. Boom. To boom. What happens? We get our 0.618 level. Take it across. And look. So instead of taking it to the true day open, you would take this range, and then this would be our mid range, right? So this is our high of day. Now, why do I say that? Because why would we need to go higher? We took sell side or buy side. We're in this imbalance zone that we needed to rebalance. Why would it go higher? It's also New York, and look at this huge drop. We took both of these sell sides from the top. Why would we need to go higher, right? So you just take the whole range, and then you could have literally took a short right after this and aimed for a 1 to 4 again. 1 to 4. Right? Or you can make it the inference that it would go back to this consolidation zone right here. And boom. It also shouldn't go any lower than this. This is our low of day right here. Why would it go lower than this? We have this order block from this wick, right? Why would it go lower than that? If it does, then it's to get rid of these sell sides, like people who sold down here for some reason. All right, let's play it. Boom, taps, free trade again. This one has no drawdown. Continue. Guess what? Now we're in New York lunch. This is where you don't trade at all. No trades should be happening here. All right, let's see what happens. Increase this to here. No trades should be happening here. Right? Sure, if you see something in your setup, take it. What happens? Market dies. What happened? Like I said, it's not gonna go down here. It makes no sense to, right? Now, why would you want to trade this? You don't. Look at how consolidative this is. There's no point in trading this, right? By the time you take a sell up here, you could get stopped out if you're aiming for lower. Why would you aim for lower when we took so much sell side? Why would you aim for higher when we took so much buy side? We made our big moves here and here. This big move took out these, right? The only reason you would take any buys would be on here, up towards midnight open, because we took sell side. We shouldn't go lower, so you could get a buy in here or a sell in right here off your ranges. All right. Now, keeping that in note, that's the end of the day, right? You could have took 1, 2, 3, 4, 5, 6. This one has like 3 different entries that you could have took. 6 different places you could have bought or sold, right? Now, this is all based on narrative. This is all based on liquidity. This is all based on imbalances. Right. Now that you know that, and also here, like, I believe it's, let me get rid of these. Go ahead and take this zone to this zone. Let's see if it taps any of our levels. I don't believe it does. No, it doesn't. Okay. Sometimes it doesn't tap our levels. That's just because, well, it's not perfect. But for the most part, it's good. It should just be here. That won't work. Actually, here to here. Oh, okay. So we do tap our level right here at this -3 zone. It taps it. Boom. Now you want to know how I draw the fib. Okay. Let me get rid of everything. So my first fib I always draw is market open. We have this to the wick. Then we have this down to the sell side. Right? Now you can do it down here, or you can do it up here. I'm just gonna do it down here, just so we can see later on what happens. Now, you know this is manipulation, right? So you could also do one going upwards, right? Boom. Now, here's your OTE zone. When this range bodies above this candle, right? It bodied right here. It also bodies right here. So let's go ahead and take this one and see if this one hits. I don't believe this one does. Doesn't work because of that wick. Okay, I understand it. Okay, so when your body closes above the higher high, or the high, right? When does it do it? At this one. Okay, it bodied above, so we do wick to wick on this, just because it's our range. Okay, let's see what happens. We have, oh, damn. So that's how it's done. But look, now we have our level. You can see that it bounced off our level 2 to tick, because we drew it right that time. Boom. Okay, that's how you draw the levels. From if you're doing range, it's wick to wick. If you're trying to find your entry, you could do wick to wick too, or you could do wick to body. It just depends on how I showed you earlier. If market wants to do that little thing, it where's the drawing tool again? Drawing tool. if it wants to go boom, 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 right? Depends if it does this. OTE zone, boom to boom. Obviously I didn't draw right, but it would tap to here and then go back up. Or just to find your range. It would just be the other one. Fuck, how do I draw it? If it's going up continuously, do it from the same zone basically. I forgot how I did it. Shit. But basically, the whole range, right? Say market was going like this. Oh, shit. We'll do. Right. As soon as it breaks it, that would be your range. Boom. Right? And it will give you your levels. I hope you understand that. It's as simple as I could like explain it. Alright? Okay. Perfect. That's basically it. We went over both fib types you could use to find your levels or entry zones. We went over draws on liquidity and imbalances. We also went over higher time frame analysis, right? On the higher time frame, we obviously want this gap to be filled. So for the week, you should be bullish, right? We went over that session highs and lows like to be targeted at New York, right? Doesn't always target it. If it doesn't, then that means there will be a bigger move later on, right? But for the most part, New York will target the lows and the highs, right? New York will target the lows and the highs. New York will target the lows and the highs. New York, target the highs and the lows. New York targets the highs and the lows. Right? This one doesn't work. I wonder why. We don't need to go lower. We bodied and we wicked. This right here. Right here. Creating an order block. We also made equal lows down here. Relatively equal lows. After taking sell side. Right here. The sell side. Oh, whoops. What happened? Oh shit. Where were we? Okay. After taking this sell side right here, we made equal lows, showing rejection. So it shouldn't go lower because it took that, and we still have it taken Asia highs and London highs, right? So boom. What time is it also? Around 9 o'clock, right? Boom. This is our manipulation. We go back, we go 9:30. This is also our manipulation. It doesn't always happen at exactly 9:30, right? Our manipulation. It happens in between the time frame of 9 o'clock to 10 o'clock, or 8:30 to 10 o'clock. It just depends. Now, this is our manipulation, right? This is our actual move. Boom. Takes out both these. After it takes both of those out, I wonder if it took out another liquidity zone. Let's go on the hard time frame. Oh shit, let's mark that out first. Mark out this high. Okay, let's see what happened. Also took out these highs right here. These highs. Boom. Right? So it took out liquidity. Right? No reason for it to go higher. So what does it do? It drops. It drops. Boom. So basically that's it. And then once it drops, why would it go higher? Once it drops, why would it go lower? Look at the time. Lunch. Nothing happened. The only reason it will go higher or lower is if a session, high or low, isn't taken, or there's an imbalance that hasn't been taken. Right? So let's take this for example. Right? It went lower because there's some type of imbalance here. Where's that imbalance? This liquidity. And also down here. This zone. What does it tap? The quarter, one quarter of this imbalance. Right. Now that you understand imbalance and draws on liquidity, you could literally trade on the 1 minute time frame and understand that New York takes out Asia, London, or liquidity. Asia pushes towards the imbalance. In London, sometimes I don't even know. London is kind of like my unknown zone at the moment. Then you have manipulation zones. Market open. Market open. 9:30 or 8:30 to 10 o'clock. And then as soon as market opens at 6 o'clock. Right. Manipulation zones. Keep those in mind. And that's how you draw your FIBS. So should be set to trade. Just understand that just because we're moving lower, we have imbalances that need to be filled. So it might look like we're moving lower on the lower time frame, but that's all because there will be a bigger move later on to fill all this imbalance. Imbalance, 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 imbalance. All this imbalances to the upside, right? We also got to take into factor news, right? So take for example this upcoming Tuesday, we have news, right? Now we're obviously going to move down if news is going to be bullish, because we want people to get trapped in sells and think we're going lower, but in reality we're not. We're gonna go higher, right? So you should be bullish. Now, just because in the higher time frame is showing bullishness, don't always assume that we have to fill this gap, because that's on the higher time frame. It could fill it whenever it wants, right? That's why looking at the 1 minute or lower time frames and looking for smaller intraday draws on liquidity will hit easier, right? Now here, if you took this trade at 7 o'clock, right, and you realized this one should be a simple like 1-to-1 or something, we may have this huge imbalance, but that was only created because we had this huge push up. This was due to this was due to news. So obviously we're gonna generate some type of huge imbalance here. But first and foremost, we already have an imbalance made. So if you go on 7 o'clock and you take the quick short, top, 50 points, and you aim for a sweep of liquidity, which would be these lows. Boom. Or this low. Aim just for the lows. I mean, that's not bad. 1 to 3. Not bad. If it went down here, it would have been almost 1 to 4. But that's the thing with the 7 o'clock entry. You want to keep in mind that it only draws towards the most recent liquidity zone. It doesn't always go 100 points. It doesn't always go like 1,000 points like it does in this one. It doesn't always go all the way up. Sometimes it'll take this out and then just go down. Sometimes it'll take that out and go down. Sometimes it'll take this one and go down. You just gotta know that if you're doing this 7 o'clock, just make sure your bias is right and you're not being greedy and you get out as soon as price is showing some type of rejection, some type of reversal. Right? So that would be our win. Now you could take this win and call it a day. This is a 1 to 3. A 1 to 3. Meaning you would get around like 100. No, you get like around $800 from this move. Right? Now, what price did here was fake people thinking it was gonna fill this imbalance. Now, I didn't get faked out because I had my fib, this wick to this wick, I believe. Yeah, this wick to this wick. And it tapped my zone. And guess what I did? I go short here. Because I have this imbalance that needs to be filled. Now it's a 50, this is technically a 50-50, right? Well, I think not. Because it rejects off my zone. And we win it. 1 to 4. 200. Sure, it takes forever. It taps back in. So you could have went break. You could have went for a 1 to 3 RR. But look, practically no drawdown. Always aiming for this imbalance. If you're trading Asia or London, you aim for the imbalance, right? We're still above this midnight open. So if you were still in a trade here, you'll be like, oh shit, okay, we tapped our level. We're above midnight open. We could probably stay in this trade, right? Aim for the imbalance. And let's just say this range, this 2 is the middle of our imbalance. Boom. Easy trade. 1 to 16. Now New York decides to dump, right? Heavily dump. Now this was because there's a huge accumulation of all this sell side not being taken, right? So when this dump happens, just know that you could have got out right here, could have got out the middle of the imbalance, but don't ever FOMO into this trade if you don't know or don't have a reason to go into it. All right, let's see if there's an actual valid fib trade in here. We break a high and a low, so we have this. We have 930 manipulation upside. Takes this liquidity right here, intra liquidity. Boom, boom, wicks it. Keep that in mind. Take this down to this wick, I believe. Yeah. Down to this wick. And this would be our trade. You see a wick once, you see a wick twice, you're like, oh shit, okay, it didn't tap my level. Fuck it. Market buy. Market sell. Get in there with a 50 tick stop. And boom, you're in this trade. Boom, boom, boom. It also taps into this -1 level, wicks it, so you could short here if you wanted to. Anywhere it taps our level, you could short from. You just got to make sure you know where market's going. All right. Now let's take a look at our zone. This is our zone. Boom to boom. What does it do? Goes in our zone and it bounces back up. Right? Now I took a trade here at this candle right here, just below these lows, and then as soon as it started going up, I was aiming for a true day open, but obviously that wasn't gonna happen because look how far we are. There's no reason for it to go that high. So technically, I should have just aimed for this liquidity zone and hoped that it would hit. If it didn't, it'll hit my stop profit, right? But that's still a 1-11, which is crazy. This was based off not any entries or not any fib. It was just based off like me knowing that market wasn't going to go down any further, right? But there's also a fib here. You could have took this trade up to 4RR and you would have hit. Now, like I say, you don't want to trade New York lunch to New York PM. But that's just me. That's my preference, right? Now, that should be it. That's all that I really can teach you that I know. But yeah, basically that's it. Draws on liquidity, imbalances, fib, 2 different ways, and your entry zone. Yeah, that should be it. All right, peace out.